And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025. Good evening. Welcome to the program, dominated as it is, of course, around the announcements by the U.S. President Donald Trump that he is imposing tariffs on Canada, Mexico, and increasing tariffs on China. Those are tariffs that already exist. And then, of course, the announcement, sort of very early our time this morning, that he's also going to stop any foreign aid that is given to South Africa, around $350 million in the last financial year, I understand, somewhere around there, because of what appears to be his opposition to the Expropriation Act that was signed into law by President Cyril Ramaphosa 2 weeks ago. Before we get into all of the reaction, and we have a long lineup of guests to react for you on this tonight, let me just make a political point. It seems to me that there is a specific reason why Trump, of all people, would be targeting South Africa. And that is because we are what I would call a swing country. We have people in South Africa who love the West. We have people in South Africa who hate the West. We have people in South Africa who love China, who hate China, who support Russia, who support Ukraine, who support Israel, who support people living in Gaza, the Palestinians, who support Palestine. Pick your topic. We have people in South Africa, because of our diversity, who will support all sides of that. And the point is, a bit like the United States in some ways, because we are a nation of different peoples, we are very important in international affairs and international global dialogue. And that, to me, is one of the reasons that Trump would target us. Never mind Elon Musk's history and the fact that he didn't enjoy high school. Whatever it is, there is, to my mind, a strategic purpose behind some of what has been playing out over the last few days. And we need to keep that in mind. One of the reasons this is happening is not because of our importance necessarily economically, but geopolitically. And that, to my mind, means that if you consider we are the only country that, belongs to BRICS and is part of AGOA. No one else could have hosted a BRICS summit and an AGOA summit within a few months of each other. That is South Africa. And that is one of the reasons why Trump is going to target us. This is going to continue for some time, I suspect. And of course, you know the impact it's going to have on international markets. For the moment, at least, the rand holding sort of steady. Could have been worse, I suppose, would be the way to sum up the damage to that. Good to hear from you this evening as well on 011 883 0702 021 446 0567 011 883 0702, and of course voice notes this evening on 072 702 1702. I must just tell you, about an hour from now, we'll speak to the consortium that's made the bid for Barlow World. Sidi Makhladi is the spokesperson for that consortium. Also, of course, we'll be speaking to Ria Ledwaba from 7:30. Her money journey on The Money Show.
702. Stephen is on The Money Show.
6 to 8 p.m.
But we start, of course, tonight with the U.S. President Donald Trump's tariffs against Canada and Mexico that are due to come into effect in the next few hours. Over the weekend, Trump said he would impose tariffs of 25% against Mexico and Canada and increase tariffs that already exist against China. All three countries have already said they would retaliate. As you know, there are many goods that go back and forth across North American borders before they become finished products. Donald MacKay is the director at XA International Trade Advisors. We start with him. Donald, good evening to you. Trump had said he would impose these tariffs. Canada, Mexico, and China are now responding. For the moment, tonight, it looks like the beginning of a full-scale trade war.
Yeah, it certainly does, Stephen. Very hard to see it any other way. So quite concerning, given that nobody ever wins a trade war.
I mean, in the end, we're all poorer. Inflation goes up here and in the United States. I suppose the big question in the United States is how long will that mechanism take?
Yeah, I mean, that's hard to tell, to be honest. The US is just such an enormous economy, and there really isn't anything else compared to it in the world. But the US has got sky-high amounts of debt. We've learned after the last election that Americans are not particular fans of inflation, and all of these actions are certainly sure to make the consumer pay a little bit more, quite possibly for a little bit less than they used to do beforehand.
Trump has also said that he would impose tariffs on the European Union, and I presume they would have to respond as well.
Yeah, I mean, it's very kind of hard to figure out what is going on here. Traditionally, tariffs are used to protect the domestic industry. But here, Trump seems to be using them in quite a belligerent fashion to simply kind of attack partner traders. So I'm not entirely sure what the end game is here. So yes, he has. And one must assume Europe can't let that slide. So I would assume there would be retaliation on their side as well.
So is global trade about to change in a major way? So, for example, our biggest trading partner is China and our second biggest trading partner is the United States. And if the US imposes tariffs, presumably more of our minerals go to China. I mean, Gwede Mantashe, the Minister of Mineral Resources and Petroleum, might get what he wants when he says that we should withhold minerals from the US. Essentially, a lot of our goods will go somewhere else if they can't go to the US. Of course, as you say, the US is the world's biggest economy.
Yes, I mean, about half of what we export to the world is minerals in one form or another, and the US is exactly the same. In fact, closer to 70% of our exports to China are minerals. So you're quite right, Stephen. If Trump imposes duties, our minerals will go elsewhere. I think what Minister Mantashe missed, however, is the US is about 10% roughly of our export market. We send about $180 billion a year there. Now, that accounts for about 0.3% of what the US imports. In fact, if you take the whole of Africa, we get to about 0.5% of their imports. So the US can do quite a lot and inflict a significant degree of pain on us, but we don't really have the same kind of leverage in the other direction. So, I don't think the way to deal with this is to respond aggressively, even though I understand why people would want to respond that way. I don't think that really gets us anywhere. We must remember that every time a tariff is imposed, you are taxing your own citizens. So every time we get aggressive with the US, we shouldn't forget that South Africans will pay the price for it considerably more than the US would. So calm heads really do need to prevail here.
Donald MacKay, thank you very much indeed, Director at XA International Trade Advisors. Jason Borbora-Sheen is a portfolio manager at 91. Jason, good evening to you. Is there any way back from where we are? I mean, the people governing Canada, Mexico, China, the EU, they'll all feel they have to respond to Trump. I don't think anyone can blame them for that. Do they have any other option than this retaliation?
Well, I think we've already seen some concessions from Mexico this evening or afternoon. So already we've had a pause in the tariffs to be applied there for a month. And that's been seen as a victory, I think, probably for Donald Trump. Ultimately, we've, I think, a slightly more nuanced take on how tariffs are being used. I think that there's been a sort of consistent deterioration in the US's financial standing as a deficit country, given the nature and dynamics of exports and imports over the last 40 years. And I think that the Trump administration have had the last 4 years to think about a pretty orderly transition away from that previous paradigm towards something quite different. So I think we can expect more of what we've seen over the last few weeks, but that actually behind that sits quite a strong ideology about using trade as a weapon to get what's required. And you've seen that through Colombia, you've seen it through Mexico already conceding, and I think you'll probably see it through Canada and perhaps even China over the next few weeks too.
So what you're suggesting is it's going to work for Trump?
I think it is. Ultimately, they need to manage the currency around that because the risk is, and this is what we saw earlier today, you get a very strong dollar. That doesn't necessarily help the manufacturing industry in the US, but I think the sequence by which that's managed is very important. And I would commend to listeners a paper published by Stephen Moran, who Trump has nominated for the Council of Economic Advisors. This was published in November 24 about how to restructure the global trading system. And I think everyone who is surrounding Donald Trump has an ideology of, sits somewhere on the spectrum of the need to use tariffs as a weapon to secure the US's place.
The majority opinion, certainly in Southern Africa, has been that this is all going to lead to higher inflation. That would be quite a high price to pay. I realize it would strengthen the US's position, but just as a starting point, it could be the end of the interest rate cutting cycle in the US and here.
I think the lesson from the last, certainly 10 years of markets has been that the obvious outcome isn't necessarily the right one. So, Donald Trump, when he was elected in 2016, the majority assumed this is going to be very bad for risk assets, this is going to be terrible for equities, and it's going to be good for bonds. The opposite prevails. COVID, the assumption was once we close down the economies of the world, it's going to be very difficult to get them back online without a severe drag, and the opposite's occurred. And I wonder whether with this also, we have such a small sample size for meaningful tariff use, the last time being Smoot-Hawley in the 1930s, occurring against the backdrop of the Great Depression, that ultimately the simple conclusion that inflation is going to go up isn't necessarily the right one. On top of which, obviously, if inflation does just go up once, but growth goes down because people are consuming fewer of those goods at that higher price, then it's probably not too bad an outcome, because ultimately that can be absorbed quite quickly. So I do think that we probably have to be less immediate in our reactions to what's going on, given that, very quickly headlines can be reversed. But I'm not sure that actually inflation is going to be the name of the game from this. I think it might well be a more balanced outcome.
Jason Borbora-Sheen, thank you very much indeed. Portfolio Manager at 91. Listening to that, Dr. Lumkile Mondi, a Senior Lecturer at the School of Economics and Business Science at Wits University. Lumkile, good evening to you. Most of the people I had heard from ahead of all of this was that higher inflation is almost a necessary outcome of tariffs. You've just heard a slightly different view. How do you see it?
Well, firstly, I think, thanks so much, Stephen. What we've been seeing in the U.S. with Donald Trump in an environment whereby interest rates were declining in response to lower inflation, and we're all expecting lower inflation and therefore much more looser monetary policy, is that this approach of using tariffs it's going to lead to huge increases in the domestic prices in the U.S. and hurt the very same community that's trying to help. However, we know that what Trump is playing, as the other colleagues explained to you, we used to call this beggar my neighbor economics, where you're using tariffs, thinking that you want to benefit America at the expense of another, when in fact it hurts the local people, particularly in a hard advanced economy like the US. We can use it as an instant industry argument, but I think for the US it doesn't make sense for them to do that, because it's going to come back and bite them.
There are other issues, of course. Trump saying overnight that he was cutting aid to South Africa. He believes South Africa is confiscating land, he said, treating certain classes of people very badly. It seems to me that this will be quite a blow for our government. I mean, most of this is PEPFAR money. We've seen Minister Mantashe's response as well, saying we shouldn't sell minerals to the US. We heard earlier that Africa's supply of minerals to the US is a tiny proportion of their imports. This also has the capacity to really harm our relationship and our trading relationship with the US.
In fact, I was quite disappointed that Mr. Mantashe jumped on this when we all know that American people in general before Trump have been very good supporters of South Africa, particularly black South Africans. I think me and many other South Africans of my age benefited immensely from the American money that gave us education. So through USAID, which is being destroyed today, and an institution here which was called Education Opportunities Council, which was giving scholarship to the US for black South Africans, and we got that education. So very clearly, we need coal mines. I know that many Americans who supported us during hard times, who were supporting us in the AGOA discussions, would like us to work together with the US because of the history that we have with the American people specifically. But more importantly, Stephen, also that we remain a very attractive partner, given that our constitution protects all those rights that advisors of Trump are giving it to Trump. So I'm hoping that through consensus, through diplomacy, many will show that South Africa, in fact, the things that Trump had that led him to make these statements don't hold. Of course, we need the PEPFAR money because it's quite important for us with the research that we do in many schools, particularly at Wits Health School. We do quite a lot of work with colleagues in American institutions around HIV/AIDS, and the development of the drugs have been very pivotal through that support that we get from the US and the partnership that we have with other countries in Africa, such as Kenya, around HIV/AIDS specifically.
Dr. Lumkile Mondi, thank you so much. Senior Lecturer at the School of Economics and Business Science at Wits University. Well, amid all of that, of course, Trump's comments have had a huge impact on various currencies. Matata Tulare is the head of FX execution at RMB. Matata, good evening to you. The Canadian dollar 20-year lows, the Mexican peso down 2%, the dollar a lot stronger as well. Why do US tariffs raise the value of the dollar? I presume it's about the expected demand for dollars to be lower.
Good evening, Stephen. Look, I suppose it's also a case of where we saw even the rand as well going above 19 earlier today. And I mean, as and when you have these headlines, it's really going to be a case of the markets really rushing into safe haven assets such as gold as well. I mean, that has also rallied to an all-time high of $2,800 an ounce. I mean, the rand also, as I said, I mean, after these comments, you know, you did see all of this flurry into the dollar and also US Treasury yields and bonds. So I think, really, I think it's, if you think about it, Trump is really following through with the threat to impose tariffs, like he said, during his electioneering phase. And I mean, already, there's a lot of calls going on between global leaders. Just, 30 minutes ago, we saw him coming out with a statement that he's been talking to his Mexican counterpart. I mean, it really is viewed as a period of either economic growth and deregulation, and then others are going to highlight that this period is really going to have concerns over volatility and really policy uncertainty. And I mean, one of the key factors, that you're really going to have with the dollar now is that, Mr. Trump's presidency, it is really aimed at America first, which is going to lead to quite a lot of market volatility over the next couple of years, and also fluctuations in emerging market currencies, including the rand. And I mean, a weak rand at this point will really raise the cost of imports and also drive inflation. And also that could now also mean a bit of pressure on Governor Lesotho Kganyago and his team to adjust interest rates.
Matata Tulare, thank you so much, head of FX execution at RMB. Really appreciate the time this evening on The Money Show.
The Money Show.
The markets.
Tana Mongwes, portfolio manager at Macro Solutions at the Old Mutual Investment Group. Tana, good evening to you. Obviously, Trump's tariffs driving global markets. Very difficult to invest in the JSE while ignoring him.
Good evening, Stephen, and good evening to your listeners. And yes, you are right. The market was down today. The JSE was down just a little bit over 50 basis points today. And it is the noise and the risks from Trump's statements and the geopolitical risks that come with it.
The situation around Pepkor, so quite a few updates coming today. Pepkor did quite a strong update. Their like-for-like sales were up very nicely and the market liked it.
Yeah, and a company that, they provide for the mass market. They've been growing market share quite nicely. And I think it also speaks to just the general improvement in overall consumer sentiment within South Africa. Interestingly, even coming into January, they're seeing very, very strong double-digit growth in sales volume. So a very, very good update from Pepkor.
Vodacom, strong results as well. That's doing nicely in South Africa. And then in Egypt also, some good news coming for them there.
Yeah, unfortunately, the Egypt story, very, very strong growth within Egypt when you're looking at it from a like-for-like or local currency point of view. But because of the devaluation of the Egyptian currency, that translation into rands is a lot less meaningful. But we do feel like they're coming over the Q4 numbers are the last where we're going to see the big Egyptian devaluation, and going forward we should see the numbers translate nicely into rand numbers.
And then obviously gold shares have been doing quite nicely recently. The gold price it looked up to me again today, and Harmony Gold in the middle of that, towards the upper end, production towards the upper end of their guidance, costs towards the lower end. What's not to like?
What's not to like? And I mean, the gold price just keeps breaking its own record. And once again, the geopolitical risks, the tariffs, the U.S. Being a net importer of gold once again, just driving the gold price up. And I mean, the gold shares benefit. Harmony, very, very good update again. Production is a little bit lower than estimated relative on a year-on-year basis. But that, I mean, they've guided on around lower planned production. But yes, high gold price, lower costs. That is what you want from a commodity, from a mine that's generating free cash flow across most of its divisions.
Obviously, at this point in the commodity cycle, with such high prices for gold, someone like Harmony is going to try and get as much gold out as they can, but very difficult decisions about whether to invest in the future, because we know how volatile these cycles can be. Absolutely,
and that's the market opportunity. But they've been optimizing the portfolio. They've been trying to get the better grades from their mines. They've been trying to be a better quality mining operation, just to set themselves up for future growth. And yes, the gold price has been quite strong for the past few years and continues to do so. And if the geopolitical risks continue, I think it's all supportive for the gold price.
Tana Mongwe, thank you very much indeed. Portfolio manager at Macro Solutions at the Old Mutual Investment Group. Well, markets, of course, watching the situation around Trump very closely. Currency markets will be watching that. We'll talk a little bit more about what Elon Musk had to say today around laws that he does not appreciate in South Africa. But just one of the big stories, a reminder, of course, that we'll be speaking to the consortium that wants to take over Barlow World. They've put in that bid. Of course, we'll be speaking to their spokesperson for the consortium, that is, in around half an hour from now. Fascinating story, the situation at Barlow World. You're with The Money Show, just gone 6:30.
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
Well, 20 minutes to 7. Well, so much to talk about with Trump and with the tariffs imposed by the U.S. president over the weekend. Already you've seen, as you heard earlier, concessions, it would seem, coming from Mexico in one way or another. I suppose the question tonight is whether you believe that this is the end of the interest rate cutting cycle, whether you believe this is going to lead to more inflation or not. And this can, on one level, be a sort of big academic economic argument, but it's really not that at all. It's an argument about exactly what you are going to pay for goods that you need, that you currently consume. I know some people will be Team Trump, in which case they believe, if the US is the strongest economy in the world, if it's been getting a rough deal against other trading countries, other trading partners, I put that in inverted commas for the moment, well, then it has every right to take action. You might believe, well, actually, the joy of trade is that it stops wars, is that it leads to people talking to each other, learning about each other. And perhaps the biggest thing about trade and isn't this the story really of the 20th century in some ways, is that it makes everyone richer. It reduces poverty. That would be the other argument. Good to hear from you this evening on 011 883 0702 021 446 0567.
WhatsApp Stephen
on 072
702
1702.
Well, the African Mining Indaba starting today in Cape Town. Now, you would expect that in some way the opening speech by the Minister Gwede Mantashe, the Minister of Mineral Resources and Petroleum, would in some way be probably the headline, that he would probably be about mining policy. Instead, it was about the US. He went on to say that if the US is not giving Africa money, we should not give them minerals. The direct quote was, "Let us withhold minerals to the US." And I presume this was a response to Trump's announcement that he's cutting funding to our government over what he claims is the fact that people are having their land expropriated. Mzila Mthenjane is the CEO of the Minerals Council South Africa. Mzila, good evening. I mean, I'm sure you were expecting at this stage that the opening address would probably be making the headlines. Probably not that kind of comment from the minister, though.
No, not at all, Stephen. And firstly, I think good evening to your listeners, and thank you for having me. So yes, the minister did make that remark as part of a longer speech. So that's not all that the speech was about. I think that needs to be put into perspective. And I did have a few questions around that from other interviews, and my response really was that I think we need to be measured in how we respond to this. Certainly from a Minerals Council perspective, we haven't seen the full detail of what President Trump has said. So, we're not really responding other to say that let's not be equally animated, if I can put it that way, in how we respond. But South Africa has always taken a stance of being engaging and engaged and entering into dialogue when it comes to difficult situations.
No, sure. I mean, look, we heard earlier on the show that Africa as a whole only contributes around 0.5% to U.S. mineral imports. So it might be a bit of an empty threat, but it would still have an impact on some of your members.
No, absolutely. I mean, if you look at what the conference has been about, starting yesterday with the Ministerial Symposium, it's about taking advantage of the expected demand from the global north for these critical minerals. But from a South Africa and the African continent, the minerals are not only important for reasons of enabling the world and Africa itself to transition into a low-carbon future, but there's a significant development opportunity. And so it's important that, the mining companies, both domestic in each of the African countries, but also foreign investment that enter into these mining operations, that those mining activities take place in a way that is competitive. And part of that is going to come from being able to take advantage of African Continental Free Trade Agreement, where there's preferential tariffs. And so we really don't want to be entering into a tariff war, which is going to increase the price of, unnecessarily increase the price of the mineral products that we want to produce.
No, sure. I mean, we hope that tempers will cool. We don't know exactly what is going to happen. And, of course, Trump does seem to be determined in what he's doing, and people have to respond. There are many other things going on in your industry at the moment. And the focus, just because of the current events, will be this in some ways. But you talk about taking advantage of this demand from the global north. And we see this, of course, with hybrid cars, with possibly fully electric cars, etc., watching that transition very, very closely. But to make sure that that happens, we need to make sure that we are producing the correct stuff at the correct time, at the correct price. Also, it would help if there was a lot more beneficiation in South Africa, and that would lead to more demand for all the products that your industry makes.
No, absolutely. And that's something that's been at the center of this conversation, not only for South Africa, but for the continent. So whilst we see the potential demand, and we do need to have what we call, security of demand equal to the required security of supply, what is also important is to make sure that Africa as well itself creates the demand for these goods. And this is something that's going to be important in terms of then stimulating the beneficiation, because we're beneficiating not only for external markets, but also for our own development. And so we need these finished products to be able to build railways. So we need iron ore and other alloys. And so beneficiation was and will be a very big topic for the rest of the conference. Value addition, well considered for the many minerals that Africa is going to produce.
Just before the end of last year, you updated us on your negotiations with the department about the changes, or I suppose really a review of the Minerals and Petroleum Resources Development Act, and just the sort of stance of the department. Are you still making progress in those talks? Are things going as well as you would like them to be?
Slowly. I think the sooner that we complete the discussions with the DMRE, and we are well aware of the changes that they're intending to make, and we see an incorporation of our suggestions in order to make the MPRDA market friendly, that will be better for everyone. So we are making slow progress. We did have a conversation, as mentioned, late last year. The minister did make it known that they are undertaking the MPRDA review, and I think equally, we want to be aware of the progress that they're making with the cadastral system. We have our hopes pinned on how that will assist with clarifying the whole process of application of prospecting rights. So these are two significant events, at least in my life, within the Minerals Council that we want to address.
Sure. A big tension between the industry and the ministry for many years has been the once empowered, always empowered argument. The last time I checked, I think you had won the sort of last round of court action on this, and once empowered was sort of fine. Are you expecting that to come back in this review?
So it's something that we will be watching very closely. maybe to take a step back when it comes to ownership, one of the issues that the minister has clarified, which needs to be translated into law, is the ownership when it comes to application for prospecting. That is still an area of high risk where you're not certain of the viability of your find. And so I think having less legislative and other burdens placed on a prospector, the better, because that's where we actually need to focus in terms of increasing exploration spend and building a pipeline for future mines. When you then translate that ore body, that find, into a potential mine, that's where we can begin to talk about empowerment. And it's also important that we protect the capital that is invested by not demanding repeated transactions on the same ore body. And this is where the once empowered, always empowered comes in. And it's something that we'll need to watch closely and really be clear going forward that that's not going to be a requirement, that when your empowerment partner harvests their investment, that you then are forced again to do another transaction, which is the essence of what this once empowered, always empowered. And it's a huge value destruction for investors.
Sure. I must ask about the president of the Minerals Council, Dr. Nombasa Tsengwa. She's currently not acting as your president. She is the CEO at Exxaro. She's been suspended. I say that because it was clear from the reporting over the weekend, late on Friday, that this battle between her and Exxaro is going to go on for a long time, and I think could be quite bitter. She's challenging her suspension in court. Is she going to stay on as your president? I don't mean this pejoratively, but sort of in name only until all of this is sorted out? Could be a long time, unfortunately.
So I think it was late last year when the issue broke out. She approached the board to ask for some reprieve for a period of time while she resolves this issue. So in the meantime, we have a caretaker president in Mr. Paul Dunn, the CEO of Northern, whilst she addresses the issues with Exxaro.
Thank you very much indeed. Mzila Mthenjane, the CEO at Minerals Council South Africa. Really appreciate the time. Realize it's a difficult time in your industry to answer some of these questions. 10 minutes now to 7.
You're listening to The Money Show with Stephen Grootes, brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025.
Don't forget 011 883 0702 021 446 0567, and of course voice notes this evening on 072 702 1702. Well, amid all of the noise and the fuss and the bother about President Donald Trump, another conversation on Elon Musk's X, where Musk himself responded to Ramaphosa, and this was Ramaphosa's response to Trump earlier in the day. Musk then said, well, why do you have openly racist laws? As you know, Musk wants to operate his Starlink internet service here. It does appear that he's refused to comply or has a difference of opinion with our BEE legislation that would essentially, as I understand it, require around 30% of the operation to be owned by previously disadvantaged people. Stephen Ambrose is MD at DR Insight Technology. Stephen, good evening. I presume when Musk refers to racist laws, he's giving his view of black economic empowerment. And he's got some skin in the game. He's talking about his business, right?
Correct. Yes. And without getting into the whole political charged environment that has been created with all these various tweets and they defending and fighting each other over Twitter, or X as it's now called. The simple fact is this. He runs Starlink, or Starlink is one of his companies that runs a global service provider of satellite services. So anyone in the world, anywhere in the world, with the necessary equipment and soon with a basic cell phone, will be able to connect to this network and connect to the internet and make calls, browse whatever they want to do, connect to companies. And so it's a brilliant system of internet that is globally relevant. Most of the countries around us in Africa have got access to the Starlink system. And what has been holding up the ability for Starlink to operate in South Africa are two licenses, an ECNS and an ECS license from ICASA. And those licenses require 30% previously disadvantaged ownership, which is a huge challenge for a company that doesn't have a company in the country. So in order to supply the service in South Africa, he's got to set up a separate company, everything that goes with this. And his model is clean and simple. It's operated globally through the internet. I've played with his setup system. You just need a credit card, you pay them some money, and they supply you a service and send you a pack. It's clean, it's simple, it's low cost, and it's extremely efficient. So now he's got to go into a whole story to set up a local entity that applies for these licenses. And what's also interesting, no new license has been issued by ICASA in many, 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 many years. So who knows whether they'll even issue such a license. But there are a couple for sale. So it's possible. But I just believe that it's very short-sighted for the government to try to force global companies to do this. What he did actually offer ICASA and the ECNS and the government was an equivalence. In other words, special licensing conditions, giving supporting non-governmental agencies with all sorts of free internet or all sorts of equivalents to pure ownership. And they've done it. There is a lot of precedence in the tech industry. HP have done it. IBM have done it. Many companies have done this exact thing, which makes perfect sense. So I think there's a lot of clarity that needs to be brought to this. I think it would really help South Africa to have access to Starlink. It's brilliant, especially in the mountains and the rural areas, and it could be used to our advantage. So I hope the government are pragmatic and come up with a scheme that works for everybody.
You say it works in most places in our neighbors. I notice it doesn't work in China. And if it is as simple as you say it is, and Musk has the relationships with the Chinese authority that he does, it would be very simple for him to set up, but he won't comply with their laws, just like he won't comply with ours.
Correct. I mean, I can't comment on that. I'm not au fait with what the Chinese laws are. But here it is, unfortunately, a race-based and previously disadvantage-based thing. And I think there are other sensitivities, whereas China, no internet gets into China other than internet that goes through the Great Chinese Firewall. So that's another thing. I don't think they're going to let people connect directly to a satellite that's connected to the global internet without any form of censorship. And he would then have to comply with that, and that becomes a whole nother issue. So I think each region is slightly different, but I do believe there is a solution for South Africa. I do believe there's one that would work for South Africans and Trump. And it has been done in the country. That is my main assertion. It's not something...
Sure. No. I mean, as you say, it has been done. It's been done. It's been part of cell phone companies' licenses for years, this kind of thing. I'm intrigued that he's got so into the argument. Now, look, he's been getting into German politics, British politics recently, so I'm not too surprised at that. The president's spokesperson, Vincent Magwenya, said basically, calm down, my brother. You have the president's number. We've started a conversation. I thought quite a good response, actually, under the circumstances.
I agree. I think some sanity should prevail in all this. It's a purely commercial venture. It brings great benefit. It's a great system. And with the satellite to cell phone system coming into force around the world at a rapid pace over the next couple of years, it will actually become more and more relevant. It's literally Skynet. You'll have a cell phone just connecting to satellite wherever you are. So there's a lot to be said for the ability to have universal global connectivity. And this is one, it's probably the best and the biggest in the game. And I think that everyone should just calm down with the politics and get on with the business and figure out a way that everybody scores. And I think there is a way. So I really hope that the Xing or tweeting stops and the hardcore business negotiating starts.
Stephen, I don't know if you meant to refer to Skynet and whether you were referring to popular culture and Terminator 1 and 2, or if you meant it didn't end too well for the humans, I seem to recall in those movies.
Yeah, that's a whole new world of interesting. I'm definitely a technology positive person. I believe it's going to bring great benefit, and hopefully it never gets anywhere near any of that Terminator type stories. But the idea of a Skynet, of a network that is available from anywhere in the world, as long as you can see the sky, you can connect, is definitely science fiction. It was something that you didn't even think of a couple of years ago. And now it's not only possible, it's working and it's happening. And the satellites keep going up and the connectivity keeps improving. And apparently the latest version of the iPhone operating system's got Starlink built in. if you're in the US. So a lot is happening, a lot is coming. The world is getting smaller. Connectivity is getting even more ubiquitous, if you can believe that. And it's happening in the palm of your hand. I mean, if ever there was a Skynet moment, this is it.
Elon Musk, he'll be back. Stephen Ambrose, thank you very much indeed. MD at DR Insight Technology. Well, lots of different views, of course, on that. In a few moments, we'll speak to the consortium that's offered the $23 billion, 23 billion rand, for Barlow World. Looking forward to that conversation in a few moments. Don't forget, Ria Ledwaba from 7:30. You with The Money Show at 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
I feel like I need a deep breath after all of the conversations around Trump and tariffs. Good evening. Welcome to the second hour of the program. The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025. Well, plenty coming up in the next few moments. We'll focus on local matters. We'll speak to Sydney Machlari, the spokesperson for the consortium that wants to buy Barlow World. 23 billion rand is the proposal. A lot going on sort of around it. Fascinating deal in many, many ways as well. We'll take that share, I presume, off the JSE, and been interesting to watch trading in it over the last little while. Ian Mann will be talking about the book Competitive Success. It's by Arjan Singh, and it takes quite a sort of war game approach to corporate strategy. I don't know if he's been advising someone in the White House or what, but it does seem like it. We'll talk about that. And then looking forward to Ria Ledwaba. She, of course, the founder of the Ria Stars Football Club, former vice president at SAFA, not necessarily on the Christmas card list of Mr. Danny Jordan, as I understand. I mean, I think that's right. I don't think they necessarily send each other Christmas cards. I mean, maybe they sort of got, we're missing in the post or something, post office, over the Christmas period. But we'll talk to her about her journey with money. We'll focus, of course, on that. Plenty to come. Good to hear from you this evening as well on 011 883 0702 and 021 446 0567.
702 with Stephen Grootes.
Email him on stephen@702.co.za.
Well, important developments around the Barlow World deal in the last few days. A Middle East consortium that includes the CEO of Barlow World, Dominic Sewela, making an offer for the country. The group, led by the Saudi Arabian company, the Zahid Group, an independent expert, Rothschild & Co., saying the offer is fair and reasonable for Barlow World shareholders. Currently, the company's AGM to consider the 120 Rand a share offer is due to be held on the 26th of February. Sydney Machlari is the spokesperson for the consortium. Sydney, good evening. Thank you for your time on The Money Show. Why are you making this bid for Barlow World? What value are you seeing in the group?
Good evening, Stephen and the listeners. Thanks for the opportunity. The consortium, it's a long-term investor. It's on the back of its support for the current strategy that has been unfolding by the management team for the business, and supportive of that, and the desire to own more of the company in private hands, to continue to grow it in accordance with the existing strategy of fixing the business, optimizing it, and growing it profitably.
When you first made this offer, if I remember correctly, shares were around 60 Rand or so. They've jumped since then. You obviously see a lot more value than 60 Rand a share. I mean, a lot more value.
Yes, that's correct. And as a result, I mean, the offer that's being made, the consortium believes that it's a fair one, and it was a competitive offer, and that has subsequently been confirmed by the independent expert, whereby the offer is actually even above the top range of the independent expert's estimation of fair value in the company.
Okay. Is there anything in particular that makes you want the company so badly, any particular market or aspect of its strategy, or anything you're seeing that shareholders didn't see before you made this offer?
Yeah, the consortium is made up of long-term, patient capital shareholders that are very familiar with the company. In the part of the consortium is a Saudi entity called Zahid that has been an operator of Caterpillar dealership in Saudi Arabia for 75 years. Although there are no immediate synergies between the two businesses, their understanding of the business. That's what gives them even more comfort to support this management team in partnering them and owning this company privately. That also aligns with Caterpillar as a major revenue driver of the business of Barloworld. Caterpillar is also supportive of this move in its preference, or also aligns with the strategy of local and private ownership of its dealerships.
Okay. Dominic Sewela, the CEO of Barloworld, what's the consortium's relationship with him and his family trust?
So the family trust, maybe just to take a step back, the new core will essentially be acquiring the 96%, will end up with a 96.5% of Barloworld. The 3.5% will be retained by Barloworld Foundation, which is an existing empowerment vehicle set up several years ago, especially to benefit black women. 60% of its benefit by its own constitution needs to flow to black women. So that will stay as is. So in the private hands, you have 96.5% by Newco. Newco itself is owned 51% by the family trust of Mr. Dominic Sewela, the CEO, and the remaining shareholding is owned by the existing shareholder in the form of Zahid.
Okay, so just to understand that, if this deal goes through, Dominic Sewela would have a controlling interest, or his family trust would?
That's correct.
Okay. So then, is he been the person driving this all the way along?
So a transaction of this nature, clearly the issue of conflict is, the parties who are alive to it and remain alive to it. In the first instance, it's governed by the takeover regulations, which sets out immediately there's an approach. It sets out a mechanism in which transactions of this type need to be governed. In this case, the independent board actually went over and above and established protocols in order to make sure that they separated the day-to-day runnings of the operation as well as the transactions-related matters. And that protocol not only was it set up, but it's actually publicly disclosed in the circular. So we think that IB has been quite transparent and thorough in its approach as it relates to this, to precisely that the parties were alive to this potential conflict. But in the final analysis, the IB, I think, has done a great job at essentially extracting a very good value for the shareholders here in the form of the offer that's on the table. When you look at the market data for similar transactions going back over the past 10 years, this certainly, from a premium point of view that's being paid, which is roughly about 87%, it's the highest. And that includes the highly contested takeover of RB Plus, Rob African Platinum, a few years ago by Impala. So it is quite I think the IB has done a good job at actually extracting that premium.
No, sure. I mean, I understand that. You're going to have to forgive my curiosity, Sydney. Dominic Sewela is running a company, right? I mean, did he approach Zahid, or did Zahid approach him? Because it looks like someone's running a company, enjoying the job. As CEO, they can see all sorts of value, and they decide, well, let me approach a partner and let's buy it, and then I'll control it. I'll have, through my family trust, 51%. That's what it looks like.
Yeah, so Zahid has been an existing shareholder for a while, so they're clearly very familiar with the company, very familiar with the management team, and actually very happy, so much so that willing to back the management team and together with themselves as shareholders or partners in the transaction with the support of CAT in taking the company private. That's essentially what has happened as to who originated what part of the transaction. And some of it I may not be privy, but Zahid, having been a shareholder in the business, wanted to own the business while it was still listed, the current 18%, and they want to own more of the business in its unlisted form.
Okay. So you are not in a position to tell us who approached who, whether it was Zahid approaching Sewela or Sewela approaching Zahid.
Yeah, from my understanding is that Zahid, as an existing shareholder in the business, actually did want to own more of the business. And those discussions developed into what you have as a deal today.
Okay, I mean, it is curious to me, Sydney, that someone can be the CEO of a company involved in a deal like this where they may now end up, through their family trust, owning a controlling share in the company that they're currently the CEO of, and they're not actually suspended. Now, I realize that's not your decision. It's not in the power of the consortium. It's in the power of the current board. But let me put it to you like this. Is it really correct that a sitting CEO should be also a bidder for the company? It seems very odd to me.
And if the price being offered in the table is a correct price, which we think it is, there's certainly nothing precluding anyone, including whether it's an existing management, existing shareholder, from buying or making an offer of the company. These types of arrangements or potential conflict are actually anticipated in the regulations. It is a setup of independent board, and if you're conflicted, you don't vote. And all the other measures, appointing independent advisors, independent experts, and all the other measures, including over and above that, additional measures that the independent board has actually put in place in order to manage this. There's absolutely nothing unusual. The final test or the proof of all of this is what price is being offered to the shareholders. Is a price attractive enough for someone to say, I'm willing to sell at this price, or I'm a buyer at this price? And we certainly think the price is an attractive one, as demonstrated by the premium that's being paid over the price just before the announcement was made.
Sure. I mean, I'm not arguing with you about the price, although I cannot recall a case in my limited knowledge of, a CEO being part of a bid to buy a company. I'm sure it's happened. I mean, maybe you know of cases. I was going to ask if he had been...
No, well, I do. There's a recently, Alviva was taken private by the management team. So it's nothing unusual. Obviously, the scale of this, it's a lot larger, than the recent transaction that occurred. So it's not unusual.
Okay. I was going to ask if he had been promised a position in the group after the deal, but after the deal, he'll own 51% of it, so he can presumably have any position he wants.
He remains the CEO after the deal. Put it that way.
All right, Sydney. And so basically what you're suggesting is, I mean, from your point of view, it's a premium price for shareholders, a lot higher than the 60 Rand a share before the deal was announced. The current management, the current CEO at least, stays on. The future is so bright that it's worth 120 Rand a share. And obviously you want people at the AGM to vote your way. Are you expecting that that's what's going to happen? I mean, the only opposition I've seen to this is some reporting, and I think important reporting, suggesting that really there should have been more transparency involving Dominic Sewela. But from your point of view, you want shareholders to vote in favor of this. Is that what you're expecting to happen?
Yes, that's what we're expecting to happen in a couple of weeks. The shareholders are faced with cash now at a very attractive price, or the alternative is obviously they remain owners of the existing company, and over how long do they realize that 120 Rand? So, but those are commercial decisions, which is where we want the deal to be. Since now the circular has been announced, the shareholders have to actually apply themselves to the crux of the transaction, which is the commerciality of it.
Sydney, thank you very much indeed for your time. Really do appreciate you answering our questions. Sydney Mthenjane is the spokesperson for the consortium, the NewCo consortium, that is involved in the offer to buy Barlow World, 120 Rand a share, the AGM on the 26th of February. Your thoughts on that? A CEO being clearly involved in the deal, staying on as CEO. We're told by the board measures have been put in place. 011 8830702 021 446 0567.
The Money Show.
Business Books.
Well, Ian Mann, MD at Gateways Business Consultants, joins us now. Ian, good evening. Good to see you. Thanks for coming in. Your book tonight, Arjun Singh's Building Winning Strategies with Corporate War Games.
Yes.
I wondered if you've been taking lessons from a current occupant of the White House with a title like that.
The issue, the idea of competitive strategy has been going on since anybody who's been to business school had to do Michael Porter's book on competitive strategy. Was like basic. But there's not as much talk about war games. Now, war games pre-existed any of the modern strategies that we have. You can imagine the Romans, a couple of Roman and generals and their people getting together and try and work out what will the opposition be doing and playing a war game. It's used extensively in the military because it's an unusual way of thinking. And as I'll explain how he does this, you'll see why this line of thinking is very, very interesting. So you realize that you need to know more about your competitors. You want to be sure that you're constantly ahead of them, and that there aren't advantages that you want that they're taking, or if they have taken them, you would like to get some back or supersede those. So the steps in the process are obviously to start gathering intelligence, and you're going to go around and try and find as much as you possibly can about your context and also about theirs. I've been involved in formulation and implementation of strategy for about 20 years. Most of the time people are together, they're talking about us. What are we going to do? What are our strengths? What are our weaknesses? What are our threats and opportunities? All sorts of stuff. But they hardly have spent a great deal of time and in a purposeful and organized way to try and find out what their competition would do. The arrogant would say, we have no competition. We'll just wake up tomorrow morning and check if that's true. The fact is things are getting faster and faster. And if anybody sees that you're successful, the first thing they're going to do is try and take you out, or at least copy you. And if they're starting without your legacy, they're going to succeed. So what he suggests you do is the first step is gather intelligence. And the intelligence gathering, he says, be more like Sherlock Holmes than James Bond. He adds this as a caution. I think it's a good one. When you look for intelligence, I'm phoning up asking you about something. I'd like to buy the house. What do you think? And you have no interest in doing that. You have interest in doing something else. He talks about being more not like James Bondish. An example he gives of a failed James Bond attempt was when P&G hired a competitive intelligence company, and they asked him to find out what Unilever, the biggest competitor, was doing. And they found out some really good stuff by going through Unilever's rubbish and things that they'd thrown out, really sensitive documents. The result was that they had to pay $10 million fine, and they fired 3 executives. The bottom line is, don't cheat. And you find out as much as you can, and he gives examples of how much open source there is. The example that he uses there, he says, when BA starts flying from London to JFK, it was a great trip, a great route, but it wasn't a popular route. And they figured, well, they're not popular in the sense for the airlines, but for the people it was. And a rival airline was wanting to know what's their strategy and how can we beat them and what would the competition be. Now, instead of spying, they did the most obvious thing, and certainly anybody could do this. They went to university libraries, and they went through the libraries to see if anybody in the business school had ever written anything about, and they found a document. There was British Airways long-haul strategy. So the stuff is in the public domain, and there's lots of it if you want to do your homework. I mention this because the first part of a war game is to do a lot of work in advance. Once you've got that, you're then going to get you have your scenarios, you know what's going on. A scenario basically is something of which you have absolutely no control. I used to love people getting into scenario rooms and saying, which scenario would we like?
Yes. And
which one's more likely? All of them are likely. The unlikely happens too often. So you develop scenarios.
Suspect the disaster. Yes.
Yeah. So what you do is you produce a briefing book. And say there are going to be 10 people in your room, give everybody the same briefing book, which is as much information about yourself and more importantly about your competitors. What do they think of you? Are they afraid of you? What do we know about them? What are their strengths, weaknesses, everything you possibly can. Once you've got that together with your 8 people, by the way, the briefing, this is a manual. It's very practical. When you hand out your briefing book, don't make it extensive. If it's 300 pages, put it through ChatGPT and get it down to 50 pages because nobody's going to read 300. So now hopefully everybody's read the book. and they now know all about their competitors and all about you. And then you say to them, half of you here are fired.
Yeah.
You're now going to be representing the other team. So we want you to analyze, knowing what you know about us, what would you think they would be doing to establish and strengthen their position? And don't come back to the meeting saying,
sure,
we think they'll do that. You come back and say, now that I've fired and I am working for the opposition, this is what I'm going to do. And just that little twist is so powerful, because I've seen the difference in people's attitudes and the way that they think when they say, we're going to get you, as opposed to saying, we think they might do this.
Yeah.
And when you've got that, you've got yourself a really, really good war room going, and the results of working out based on everything we know, and we see the two sides clash. What the soldiers would do is work out, if that's what they're going to do and this is what we can do, this is our best way forward. And that's how you land up with your competitive strategy.
There must be a lot of competition in this particular part of business books. You say it's a bit like a manual in a way. Yeah. Is he better than some of the others? I mean, he clearly has lots of experience from his background, Arjun Singh.
I think that there are very, very few people. There's a lot in strategy, there's a lot in scenarios, there's a lot in, but very little practical books. I think this is the most practical book I've come across. I've heard it all referred to elsewhere. And I've obviously looked in the military, I've looked at it from that side. But I haven't seen a plethora of competitive books on doing how do you run an effective war game. And I think that's where his novelty is.
It's probably not for everyone in all industries, but in competitive industries is what you're really looking at here.
I don't know of too many industries that don't have or won't have soon have a competitor.
Yes.
So I think in that sense, and even if you think you're unique, it's a good idea to go through one of these just to check whether you really are.
And I mean, obviously you want to set up your war game in a certain way. He says that it needs to be a safe workshop environment.
Yes.
What does he mean by that? People need to be able to say what they feel.
Well, once you've said to them, we're dividing you into two groups and you're the enemy, and in an environment like that, that's pretty safe. That's about as safe as you can get. And when you say we think, that's very different. We're instructing you to think like they are and be as ruthless as you can. If you've seen that our CEO is not up to the game, that's where you say it. You're supposed to say it. You wouldn't do that in the traditional war, in the traditional strategy session. It would be impolite.
and career shortening. All right, so a recommendation from you.
Indeed. I think that it should be read by everybody, and it's accessible for small businesses. So all small businesses have competition, but they don't get around to even thinking like this. And if you don't have a team of, if your whole business is only 10 people, it would even be worthwhile taking everybody who can grasp something about this to come into the war room and assist you to work out what's going on around you, so you can be in the best position to really make a difference.
Ian Mann, thank you very much indeed. MD at Gateways Business Consultants. The book is by Arjun Singh, and the book is called Building Winning Strategies with Corporate War Games.
7:02. Stephen is on The Money Show.
6 to 8 p.m.
Still to come on The Money Show this evening, don't forget we'll be speaking to Ria Ledwaba, someone who loves football, has a journey with football, has a journey with money as well. Has had one or two court battles of late, of course, some moments of difficulty with the Football Association, but focusing about the story of Ria Ledwaba this evening. Really looking forward to that. Watching the markets as well, of course, very closely this evening, and just watching what is going to be happening around President Donald Trump, the tariffs, the fallout from all of that. And of course, we are expecting also more reaction to what he said about South Africa today, when he said he would no longer be giving South Africa any foreign aid. And that was, it would appear, in response to the signing of the Expropriation Act into law by President Cyril Ramaphosa 2 weeks ago. I made the point earlier in the show that one way or another, because we are seen as a swing country, we're part of both AGOA, and BRICS, we are going to find ourselves in the firing line when it comes to issues around geopolitics. When someone like Trump comes to power and sharpens things, makes you choose one way or another as South Africa and as South Africans, you're probably going to find yourself tested one way or another. You're going to be pushed and pulled in this pendulum and will be one of the key countries here. A lot more to come. Ria Ledwaba is next. You with The Money Show. It's just gone 7:30.
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
23 minutes now to 8 the time. Well, time to sit back, relax, hear a story about someone and their money. Really a story, I suppose, about money without the numbers, if I can put it like that, and really about their lives. And this evening, grateful to Ria Ledwaba, the founder of Ria Stars Football Club, former SAFA Vice President, someone who's been in the public domain for many years, and she's agreed to tell you her story this evening. Ria Ledwaba, it's an honor to talk to you, and thank you so much for agreeing to talk to us. Good evening.
No, good evening, Stephen, and thank you for inviting me, and good evening to your listeners.
I mean, obviously we know you through your passion for football, your involvement in it. I read somewhere today that you've never actually played it. You did have 4 brothers who I think did. Where did your love for football come from?
Well, from those brothers that I lived with, that I followed all the time. They were football players, all of them. And I said previously that one of them actually was invited to play overseas, but my mother didn't allow him to go.
Sounds like a strong mother. Where were you growing up at the time?
Yeah, well, that time I think it was not fashionable for soccer players to go overseas at that time. Probably would have been one of those first players in South Africa to have been invited, but she simply said, no, I'm not allowing my son to go where I've never been.
Where were you growing up? Where was your family? What kind of community were you growing up in at the time, Ria? I mean, when you were a young child, a teenager?
Well, I grew up in a village where we would go to draw water from the river, go to the bush to go and get wood for the house. That's where I grew up, in a village in Bulovedu, around the village called Medingen.
Oh, I see. Okay. And I mean, clearly at that time, I mean, a very difficult life if you're going to fetch water and wood and things like that. I mean, a very difficult life, and some people still live that life now, but still a very difficult life for you.
Oh, well, when you grew up, it was that life that was before you, and it wasn't really very difficult because everybody was doing it. We'll wake up in the morning, early in the morning before we go to school. We'll go and make sure that there's water in the house before we go to school.
4 older brothers. Were you the only girl? I mean, 4 older brothers and then a girl. I mean, there will be some advantages and disadvantages to that in a family.
Yeah, well, but unfortunately, my mom was very strict. I had to work, you know, although I was the last born and the only girl, I had to work like all the 4 of them that were working there. The first one was already in high school, and the second one. So we're only the 2 and myself and my other sister that was I adopted from my mom's aunt.
Okay, yes, no, I understand. So when you went to school and when you were at school, did you have any idea of what you wanted to do? I mean, was there any kind of, did you know then what you were sort of getting into? Was there certain things you wanted to do?
Yeah, I've been one of the A+ student all the time when I grew up, and I wanted to be a lawyer. That's what I wanted to be when I grew up. But my mom was a nurse, and she insisted that I become a teacher. Whether I liked it or not, I had to follow her dreams. So that's why I went to do teaching instead of doing a law.
So what kind of teaching, was you never wanted to go and do it, I suppose, but you didn't have much of a choice. Where were you teaching? What kind of studying were you doing?
Well, I went to a college called Rutlatlilwe College of Education, but now I think it's called Mamokgalaketshweni College of Education. That's where I went to school, somewhere in Mutetema in Groblersdal. That's where I went to do my teaching diploma there for 2 years. And after that, I went to teach in a mine school in Boomspreet.
Okay, so you're teaching. Where did you go from there? Because, you've come a long way. Many people start life as a teacher. They don't all do it for forever. Where did you go from there?
Yeah, I taught for some years. I think I left Boomspreet and I went to teach in a high school somewhere in Gazankulu, in the former state, somewhere in Zanim. And after that, I decided to leave and I was employed in a bank.
Okay, so then from going from a bank to football, how did that happen?
Yeah, from a bank to government, where I was a spokesperson for the former minister of the chief minister of Leboa. I was a spokesperson for some time and work with the traditional leaders as a deputy director in the Department of Traditional Affairs. And thereafter, I decided to leave and go and work for the bank.
Okay. Quite an interesting job being a spokesperson at that time.
Yes. That's what I did, working with the traditional leaders. Very difficult task. I know almost all traditional leaders in the Limpopo province, now called Limpopo province. That's what I did, and then I decided to go and work for the bank.
Okay, so you're now working in a bank. What were you doing in the bank?
I did almost everything that, I've been an administrator at the welcome desk, where you tell people what type of account they can open, and I went to be a check clerk where I was checking other people that were doing transaction, taking the slip that you get when you write there to put it into the computer and all that. And I was also a teller.
Okay.
In the bank, so I did almost everything that that is done in the bank. I was actually one of the people that were asked to take the accounts from manual to computer.
Okay, all right. So we've had Ria Ledwaba, the teacher and the banker. How did you end up at Real Stars FC, or starting it rather?
Well, when I was at both jobs, I had a team that was playing in different competitions, Chappies Little League, under 10, under 12, under 19 Caltex, under 21 Toyota under 21, and finally starting a team that plays in the league. At the time when I was working, I was also part-time having this team until around 1987, 88. I then decided I want to do football full-time. It wasn't very comfortable for me to work and go and see the boys only, after work. So I wanted to be there with them. I wanted to see the team grow. I wanted the team to actually get promoted to the Premier League. And I decided then that I'm leaving my work and starting a team, being permanent, running a soccer team. And that was when I was still in the first division of the PSL.
Sure. So just explain it to me. You're working in a bank. How did you end up in the football industry? I think this is what people will want to know is, had you always been involved? Are you watching your brother? Did you think, well, actually, I just want to be more a part of this? Was there something that really attracted you to it? Did you think, well, maybe actually, it's about time a woman started a team in this league? I mean, where did that come from?
I think, as I said, I grew up in a family of boys where they played football, but I just felt, this desire for myself to run this team as a business on a permanent basis. And I made that decision and I left government and I said, no, I am quitting. I am now making sure that the team has everything. With the team, you have to go out there, get sponsors, you have to negotiate where you play, you have got to negotiate with the transporters out there, who's going to carry the players from point A to point B. So at that time, I just felt this desire that I am ready now to run this team on a permanent basis without any disturbance of going to work for someone.
So I'm sorry, Ria, you'll have to forgive my curiosity. So I have things I enjoy doing, and I haven't given up my career to go and do them. And you clearly decided you were going to go and do this thing with football. What made you decide that? That's what I'm really interested in. Was it the people around you? Did someone encourage you? Did you want to do it? Did you see it and just think, actually, my family's been involved in this, I want to do it? I mean, what was driving you into it like that?
I think it's more about passion. I loved the game. I have never played the game, as you have said, but it was just this love, the passion for football. And I must say, at that time, there was not even a thinking of I'm going to make money and all that. It was simply the passion that I had and the desire to be able to take these young boys out of the street and giving them something that they loved. And I had so many players that wanted to play for the team, and that really, really encouraged me to be there on a permanent basis and travel with them, because there's also traveling with them, because I don't remember me not going to one game ever since I've been in the team.
Where did you get the money from? I mean, that must have been quite difficult, and as you say, transport isn't easy.
Very interesting. That's a very interesting question. Where did I get the money from? I didn't have any money at all. I did not have any resources that I would say, yes, there is a budget. That's what I'm going to do. This budget will do that. Nothing at all. I used the money that I received when I went when I resigned. Very little. I can't even remember. I'd be shocked if I can remember how much was it, but it was very little. But that money that I had with my family is the money that I used to run the team. Fortunately enough, my husband had a bakkie that could carry the players from one place to another, so the transport part was sorted. So we didn't have a problem with that. The problem was to provide them with meals and to buy them uniform. You buy uniform. There was no parents, for example, that would buy uniform for their own children. So they depended on the team. They depended on the people running the team to provide them with the uniform that you see when a team plays. They have to be properly dressed with soccer boots, everything that is needed there. You have to do soccer balls, you have to buy them.
Sure.
So that's what I did with the little money that I earned from my retirement in not necessarily when I resigned from those positions that I had.
We're talking to Ria Ledwaba this evening, the founder of Ria Stars Football Club and former vice president at SAFA. We'll continue in a moment.
You're listening to The Money Show with Stephen Grootes, brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025.
Speaking to Ria Ledwaba tonight, the founder of Ria Stars FC and former vice president at SAFA. Ria, welcome back. I mean, when you entered the South African Football Association, you must have thought, sure, now you're kind of among, the big leagues, you're doing well, you have influence in society. I remember watching you at press conferences in those years. It hasn't ended as well as you would like it to end, perhaps. Let me put it like that. You would have liked it to end in a different way.
Yeah, well, Stephen, true. I've been in football for 3 decades. And when I entered the South African Football Association, I entered around 1995 when I was the chair of the Women's Committee, but I wasn't an NEC member. For example, I wasn't in the executive. I was a chair that would simply chair the meeting of the Women's Committee and then send a report to the NEC. Until in 2013, when I was then elected into the executive of South African Football Association, and in 2018 I was then also elected and also appointed as the vice president of South African Football Association.
I mean, you're still, I think your fight with Danny Jordan is still alive. There are various court cases. It must have been very frustrating for you that it ended in that way, or ended for the moment in that way.
Well, it could have been better. When you are in an organization and there's just one man show, it's frustrating where there is so much that there are other people that could contribute. For example, an opportunity for you to go out there to the market and sell women's football. I think if it started at that time, I think women's football today would be even much better than where they are. I mean, if you look at that time, there was nothing. They would wear the outfit and bring them back to SAFA because it wasn't them. It wasn't like now you have an outfit, it's all yours. So I'm talking about that time, but there was never an opportunity for anyone that was serving under him to go out there and be able to sell exactly what I was doing, for example, as a chairperson of women's football.
He's been arrested. He faced charges. He denies those charges. Would SAFA be better off without Danny Jordan?
I think so. I think it will be a better organization. There are strong personalities out there that I believe they could turn things around, especially on a position of a CEO. Someone that is very acceptable in the market, someone that have done it, someone that have been there, changing organizations to be better. And to have, a president that can delegate, that can delegate to the capacity that is under him to be able to go out there and do certain things. But under his leadership, that is not possible.
Okay. Ria, through all of this, I mean, you've done amazing things. You've led teams, created teams, at a time when much of society was against you. You've had this big fight now, you're still fighting. The strength for that, I mean, what would your advice be to a young person, maybe a young woman starting maybe in sports management now? I mean, what would your advice be to them? I mean, because you do still need to be very strong to do it.
Yeah, well, especially in the football industry, it's still a men's world. Women are coming on board now. It's very important that you understand your statutes for the first time. I think I was strong because of that day, point that I knew the Constitution. I knew what is required of you to be able to perform your duties in terms of your statute that is before you. So I think it's important for young people when they get into organization, the first thing is to understand the policies of that particular organization so that you empower yourself and you can protect yourself if there are abuse of powers, because there's a lot of abuse of powers out there by people that are running organization and people that are running companies. So if you do not understand your policies of your company, you're going to be abused. You have to stand firm when you believe in something, and that's what I did. I believe in what I was talking about. I believe that football in South Africa should have been far much where it is right now. I believe in football development. I believe in school sports. I wanted sports to be played at school, football to be played at school. That's where we had the 1995 champion. It's because of the boys that came from the school. Didn't come from the clubs, they came from the school. So it was just that passion that I wanted to make sure that I think young people out there, you need to have passion, you need to be disciplined, and you need to know the policies of your organization.
Ria Ledwaba, nice to talk to you. Thank you so much. Founder of Ria Stars Football Club and former SAFA Vice President.
You're listening to The Money Show with Stephen Grootes, brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025.
That's it for The Money Show. Watch the markets. It's going to be a roller coaster. Back tomorrow just after 8 o'clock.